This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
In Lecture 4, here in Chapter 14, we see the last of the CGT reliefs relevant to our particular syllabus. Now, in terms of Lecture 1, we saw entrepreneurs relief, and what did it do? It gave us a lower tax rate. There was the relief, it giving us a tax rate of 10%, almost inevitably, other than what it would have been, 20%, a halving in the overall tax charge if you disposed of a suitably qualifying business asset. In Lectures 2 and 3, we have seen deferral reliefs, where gains arising on the particular description of qualifying business assets for either rollover relief or for gift relief, where those gains could be deferred. No immediate chargeability in relation to the disposal just made within the tax year, but that gain is deferred until a future point in time and a future disposal. They were deferral reliefs. Well, now in Lecture 4 we get the best of the reliefs that would be possible. And that is, in fact, what isn't just a relief, it's an exemption. It's called a relief. It's principal private residence relief. Because what it does not do is to necessarily exempt the entire gain that arises when an individual disposes of his or her PPR, principal private residence, as we will know it. And what we have to do is to deduct from the overall gain made, and a very simple calculation of a gain made, on the disposal of your principal private residence, basically your home there in which you have lived. What we'll be able to do is, having computed the gain, apply PPR relief that in probably 95% plus of situations in real life on the disposal of a PPR will result in fact in 100% relief, where none of the gain will in fact be chargeable. But of course, in any exam question, to make it worthwhile, we'll discover that there will be situations in which some part of the period of ownership of the individual's home, their PPR as we'll know it from now on, will not be eligible for this principal private residence relief there, and therefore will still create some chargeability. Thankfully, when dealing with this, there are no changes in the rules from FA 2017. So again, we'll use the FA 2017 lecture. And what is more, in relation to this particular lecture, there's no changes in the transaction dates either. So it is exactly as it was there. So you can use, again, your FA 2018 material. So over to you now to deal with and enjoy the benefits of PPR relief.